Vincenzo's Gold Crypto Investing this July the 7th, 2025, nightly, daily cryptocurrency, blockchain technology, gold, and silver bullion video. As you're here riding along and joining me on my mission of more than a decade to become an asset millionaire via gold and silver bullion and mining stocks, cryptocurrencies, 401k, steady investing, real estate, and of course, cash on the side for peace of mind, emergencies, expenses, and accumulating or adding to an existing asset, right? Accumulating a new or adding to your existing asset with truth, trust, education, and information in a super simple and easy way to build millionaire status via asset acquisition, right? And that's what it's all about. Leave the debt to the side. Don't waste and have mass spending on nonsense, but take your money by having no car payments, by paying cash for cheaper cars and using that money to invest for 5 or 10 years versus buying a $60,000 or $80,000 car and paying $800 or $900 a month. You can use that difference by buying a $15,000 car in cash and start investing that $700 a month, $500 a month, whatever it is, $200 a month, instead of having a payment to somebody, and you can be building wealth, right? And that's what it's all about. You can see the Bitcoin price is down about 0.5% here on the new daily candle that just opened. It was down about, I think, just over 1%, maybe 1.1%, or right around 1% yesterday, slightly down. Ethereum was down slightly more than that. XLM and XRP were up early and then sold off late, as well as the rest of the crypto market. As part of that was to do with the Federal Reserve and Jerome Powell, with the better than expected jobs numbers, lowered the chances of a rate cut this week with the Federal Reserve, right? It's about a 97.5% chance of a rate pause still, where they're not cutting rates, right? They haven't cut rates in the last couple of times, the last few the Fed meetings, and I don't believe they're going to raise them again. And where was this at? It's coming up here. I wanted to, hold on one second. Strategies, Bitcoin, Binance, investors. Here we go. We were talking about earlier the companies when they go all in on one asset and lever their money and borrow massive amounts of money to put into one asset class. It's usually historically a 76% chance of it not working out via forced liquidations, bankruptcies, and the rest of it. And you can see another company is jumping on board, but much later. And these are what's more interesting. MicroStrategies at least did it relatively early. They started doing it, I think, in around the $20,000 mark and just been buying the whole way up. These guys, Japan top corporate Bitcoin treasury company, MetaPlanet, has acquired another 2,204 Bitcoin for $237 million. On Monday, the company said it acquired the price at 15,640,000 Japanese yen per Bitcoin, about 107,700 US dollars. This brings MetaPlanet's total holding to 15,555 Bitcoin, but look at their average price, 99,985. This is all on borrowed money like MicroStrategies, but they have no room for any kind of a normal bear market. If they have a normal 30 or 40% bear market for 6 or 8 months, this company would be in big trouble, as their average price is at 100,000 essentially, according to Bitcoin Treasury. It looks to me like they bought their first Bitcoin at right around 99,000 right before it went over 100 for the first time. According to BitcoinTreasury.net data, MetaPlanet is the 5th largest corporate holder of Bitcoin. The company overtook the holdings of electric vehicle manufacturing Tesla in late June with an acquisition of 1,234 Bitcoin, which brought the holdings to 12,345, with Tesla holding 11,509. The company also added Bitcoin miner Clean Spark's holding of 12,502 Bitcoin with a separate 1,005 BTC purchase valued at $108 million on June 30th. corporate Bitcoin treasuries keep growing. The announcement follows the world's top corporate Bitcoin holder, MicroStrategies, formerly known as now its Strategy, announcing the acquisition of another 4,980 Bitcoin, valued at a little over $500 million on June 30th. The latest buy, the acquisition brought the firm's holding to 597,325 Bitcoin, purchased at about 42.4 billion at an average price of 70,982 per coin. Crypto entrepreneur Anthony Papliano's firm ProCap made its first Bitcoin purchase of 3,724 Bitcoin of 386 million in late June. Healthcare tech firm Semler Scientific announced last month that it plans to increase its holding to 3,808 Bitcoin to 105,000 Bitcoin. Glassnode lead analyst James Chuck suggests on Saturday that Bitcoin treasury strategy may not have the longevity many expect. Chuck said that easy upside may already be behind us now, companies entering the space. And that's what I was pointing out when I was seeing all these now. All these other companies are jumping on the bandwagon, seeing somebody over the last several years being able to, what seems to be pulling it off because the market's been going up and he's just been buying strategies or MicroStrategies, Saylor's company on the way up. But now you see all these other companies doing it at very, very high prices after a massive bull market, right? It's not like these guys are doing this and taking a chance on a bear market. They're doing it after the Donald Trump bull market to new all-time highs, right? They're doing it after Bitcoin nearly went up 100%, essentially, in about 8 months, right? And now they're going to start doing it. They weren't doing it. You got to give strategies that. At least they seen a trend late still when they started doing it, because they weren't MicroStrategies. They weren't buying Bitcoin down here, right? They got in and he got in and bought into the hype cycle and bought into the bubble in this area after it had its massive run up. And then he continued to buy. And then he really started buying a lot up here, right? And then he was underwater very, very quickly after he bought those, because you had a classic bear market right here. But it was a shorter lived one, and then it started to rally to the upside week over week and month over month to relieve stress for MicroStrategies. But all these other ones that you're seeing now, they're all buying their first Bitcoin and leveraging their stock and mortgaging and betting it all, the farm on one asset, all the way up here at the top at near 100,000, 85, 90, 100,000, right? So that's very interesting, because you can see what we've been following is this rising channel. And as we do know, if you do break out of this rising channel right here, we can delete that. If you break out of this rising channel where you have the 50-day moving average sitting right there at 105,000, 101,000, and 95,000 respectively, are the 100, the 200, the 100, and the 50 from bottom to top, green, blue, and red respectively. And as you do know, we've been in this rising channel ever since this big correction and bear market that actually had a big crypto capitulation, where the FTXs and the Celsiuses and the BlockFis and the Lunas of the world and the coins that correspond with those companies, the BlockFis, they all went bankrupt and everyone lost a bunch of money, unless a couple of them a few years later, the government bailed them out essentially. But a lot of people lost a lot of money, had this big bear market, and you've been in this rising channel ever since. And these channels can go for a long time. You can see this one started in about September of 2022, and now we're in approaching mid-July of 2025. So that's over 3 years in this rising channel. You've hit upper resistance several times. You've hit lower support, both uptrending multiple times over multiple years. And you can see the thing that I'm concerned about, and I'm most interested in, not concerned, but interested in, is you got this big conveyor belt that looks like our big turtle, the shell right here, and then his long neck, or the conveyor belt. And these are technical bull. They move to the upside in bullish fashion, but they usually 7.5% out of, or 7.5 out of 10 times, they break down at the end of the move to the upside, and the technical target is actually the bottom of the channel, near this area between about the 28,000 and about the 18,000. And you do know I have underneath targets of 57, 621, and 32,000 off of what I believe is a head and shoulders topping out reversal pattern that is in the daily time frame that we had drawn out, and you can see one of our tracks to bring it down there. But I do find that very interesting because that would bring some of those companies that have just gotten into the leveraging money. If you had a bear market to that extent, it would put a lot of pressure on them. And if you ever had a forced, and this would be worst case, and this is a simple education for you guys and very important in the crypto sphere. If any one of those large holders, like MicroStrategies, owns about 3% of the Bitcoin, total Bitcoin, and some of these other big companies that we've talked about and just seen that are borrowing and they have tens of thousands of Bitcoin, if any one of those were ever forced to liquidate or forced to sell or went bankrupt and had to just at market order all at once dump their levered Bitcoin that they bought, it would be something like you've never seen in the Bitcoin sphere. It would be like an FTX coin going bankrupt. Not going bankrupt, but it would be where you've seen a 60 or an 80% or a 90% collapse in Bitcoin in the matter of days, hours. If you ever had one of those big boys that own like a Michael Saylor 3% of the total Bitcoin, or a company like the Japan company we just looked at that has 20,000 Bitcoins, say they had to liquidate those, it would be very, very interesting and crazy, and it would have a rippling effect. And that's what happened back in the tech days, where one company went down, which was involved with indirectly or directly with other companies, and it brought them down, and then that cascaded to companies below them that were indirectly or directly involved with them, and then it just cascaded down and took one by one by one until it took out virtually them all, right? And that's something that we're going to be paying attention to see if that ever does happen or ever does look like it could happen and puts a lot of pressure on those companies, or does this just shoot straight to 140,000 and these companies don't have to worry about that for a while, right? They would have a lot of room to breathe. They would have a lot of money if they wanted to take a small profit to really take something off. But they would probably more or less just keep going all in until it failed. So that's going to be very interesting. But that's the Bitcoin price. If we look at the Ethereum price, it hasn't changed much. It's still above the moving averages. And we do know if you're above these three moving averages, the 50 is underneath there. You'll see if I change the angle. See the 50 right there. They're all right there. If you're above it like you are now, you would expect an upside target of $3,067, bottom part of that green trading zone. But if it slips back at any time below this, you would expect a retest eventually to $1,080 and $1,803.20, or the top part of this blue support and resistance box down there, right? You can see that where the bottom part of the lower support is. You got upper at the bottom, the top part of that box is 1,800. The bottom part is 1,037. Very simple. Right now, you're just above the three moving averages and the 200-day, which is the closest to, just like it's been for the last couple of days. So that's what we're going to watch. The XLM price is the same thing that we've been looking at the last few days, where we were down here until today, where you can see the two candles the last 2 days where we pumped up near this 25 cents, wicked exactly to the 50-day and that overhead 25.5 cent resistance. And we were talking about, was it going to catch up to where XRP was, where XRP was below all these moving averages and below the major 209 neckline support, and then got back above it. The same thing as the 25.5 cents is the 209 neckline support to XRP. And we were watching to see if this would come up and actually catch up and sit up here. It's attempted to do it today. And then you can see initially it got rejected, which you would expect it to do. See how it beautifully got rejected by this area, because that's the major support and resistance area. So you would expect it to get rejected initially. Now what you would look for is in the hour time frame to hold these moving averages here, and then you build your base back up, and then you make another run up on your next move up just like that, and then you hold on top of it and continue to try to move up. You reload like you did here and like you're doing now, right? So that's what we're watching out for. And if you can do that, you can be bullish and try to get back above the 27 cents. If you continue to get rejected and you stay below the 25 cents, it's going to want to eventually force you down to the 18 cents. So that's very important there. You can see the XRP is doing what it's been doing. It's been pumping off the 209 neckline support and then consolidating, then pumping again, and then consolidating, pumping again, and then selling off, right? You can see it's been doing that for quite some time. And we've gone over this extensively. It's because in the short time frame, you see this candle here, that's all the volume, and that's the mean of the volume in this short time frame. And you can see there's a lot of sellers. When you're coming from below it, there's a lot of sellers when you're running into that area, and it starts at $2.29, and it ends at $2.40. And if you look right there, look at where you've had all the sharp sell-offs, right? And another one just took place right there at the start of that zone where the 235, that candle starts, right? This big stick in volume right here, and that's been the sharp sell-off zone. The same thing is down here. You notice this has been the sharp support zone, the 209 neckline support, and you can see that coincides beautifully with where the most of the volume is here. So when you're coming from above it, the opposite of coming from below it, these are going to act as buyers, and the buyers want to buy back, and that's what it's been doing. Then you come up to the sell zone, and since you're coming from below this area, it's going to act as resistance until you could break it, or vice versa. On the 209 neckline support, it's going to continue to be support until you can break it and flip it, right? But if you can stay above these moving averages there, you can see the 50 and the 100 at 221 and 223. If you can hold that, you can try to make another run up here at the $2.55, next major area of overhead resistance. If not, you're going to slip back below these, and then you're going to come right back down to the 209 neckline support, which is just below the $2.11 200-day moving average. And your major swing levels are, obviously, if you break it, the 255 to the upside, and your major underneath support is this regional low of $1.91, right? So that's what we're looking at there. If we continue to move along to the AMP price, you can see AMP tried to make a run up, and look where it got chopped down by the 50-day moving average in the daily time frame. You can see over the holiday weekend, it continued to get chopped down there, but it's just above our critical pattern support level. If we go back out to the daily, you can see we're still above our pattern support, and as long as we're above this pattern support, we're fine, because we're where we should be. You can see it held support, wicked out, but held support, wicked out, but held support, wicked out, formed a nice local double bottom here back from April the 7th to June the 23rd, or June the 23rd. And now we tried to bounce up, but you can see we got rejected by that descending overhead 50. But we just need to stay above this major support level and continue to consolidate and try to build a base and eventually work your way back up here. But that's where we're at right now. As long as we're below the moving averages that are descending and putting a lot of overhead pressure, it's going to force you back to your pattern major underneath support. And that is something that has to hold, because if you break that, your next area of major support would be down here at about the 00257. To get bullish, you need to hold this support obviously right here, and then fight your way through these descending moving averages, and eventually start using them as support and build the base on your way back up. Something like you were trying to do here, but you failed it and then slipped back below the 50, right? So that's what we're looking at there with the AMP. With the ALGO is a similar thing, but its price action you can see is at the 19 cents. It's getting rejected by the 50-day moving average in the daily time frame, and then the 100 and 200 are right above that, which right now, as long as you're below this 20 cents, that's a critical flip to resistance. And if you're below it, what it's going to want to do is try to attract the price down here to the 10 cents. You've already hit your regional double bottom after you came down here 2.5 months ago, and then you rebound and it got rejected. So you've already met that regional double bottom. Then you came back up to try to break back above this critical 20 cents, 19.5 cents, and you can see it got rejected beautifully both by the 19.5 cents and the 50-day moving average, and then the 50's been descending it ever since then. And if you're trying to get bullish and try to work your way back up towards that 23 cents, 25 cents, you got to get above the 50, hold on top of the 50 and this 19.5 cent horizontal left to right line, and then start to slowly work your way up and get on top of that 200-day in the daily time frame, right? So that's what we're looking at there. The XCN's the same thing. You can see after we had that little bit of a rally about a month ago, we've been being fairly consistent in between the 200-day moving average and just below the descending 50 and 100-day moving average. And right now, we've just slipped just below the 200-day, and that's very critical. If we stay below the 200-day moving average, the price is going to want to come down here very, very quickly, something that we've been talking about, because it'll be extremely bearish. So this is very important to follow the next 24 to 48 hours. Does this stay below the 200-day moving average, or does it quickly, after maybe a wick down like that, get back on top of it and then try to build the base? Because that's how you get bullish. You have to get back on top of that 200-day in the daily right there at 0.01378, and then get back on top of the purple box at 0.01495, which coincides with the 50 and the 100-day, and then you have to stay on top of that to get short-term bullish, to maybe try to make another run, get rid of that. Up here at major upper resistance at the 0.022, but right now you can see you're just below the 200-day in the daily, and that's very bearish if you're below the 200-day. So that's very critical right now. It needs to have some kind of momentum to the upside to break that. Similar to what just happened here in the XDC price. You can see you just had a freshly bearish cross where the medium-term moving average in blue there, the 100-day, got below the 200-day. But you can see we've had two big pumps recently that both pumped above this critical 0.059 cents, which was a regional low. It's trying to hold. And right now, again, you have to get above the 200-day in the daily and hold on top of it to get bullish, to try to work your way back up here, something you were not able to do in the XDC price back here during May and early June before you had the last dump, right? And you can see the last time you tried to do what you're doing now, right here, you got rejected. This time you've had more force and more fortitude, and you've actually moved up higher into the moving averages, even though you're slightly below that previous pump. So we're going to watch this, because if you get rejected and you're below these moving averages, just like we rejected their advertising, it's going to want to eventually bring you all the way down here. If you stay below these major moving averages, that's your underneath target from this head and shoulders right here, topping out reversal pattern. You can see your targeted move from the neckline. And if you can get, and you want to get bullish, like we just talked about, you have to get on top of these moving averages right there. The 50, the 100, and the 200, see them all right there, are all right next to each other in the daily time frame. The DGB price is very similar. It had its head and shoulders topping pattern right there that we called. There was its targeted move at the 0.00560, and we've been broken down. And the last time we talked about this, you can see it's been a few days, because look how far the moving averages have moved. The 50 days moved that far, the 100 days moved that far, and the 200-day has moved that far. And you can see our horizontal left to right support area that we were telling you would be critical if we broke that, and we did. And now we've come down to a regional low from the wick low back here in February. We're actually right back into that zone again, something that we told you would happen as we've been all in here for about 2.5 months. We said if it ever came back, or when it did and broke this area, the first thing it would do was come to a double bottom from that February the 3rd super wick low. And that's what it's doing. And now it's got obviously buyers there, because there are buyers here. You can see from the past short-term history of the price, and that's going to try to buy back up into this falling overhead 50-day moving average. But if it fails to materialize, or gets rejected, if it tries to materialize, it's going to want to force it down here. And as long as you're below this horizontal yellow line right here at the 00840 and this descending 50-day moving average in red, you're very, very bearish. If you're trying to get bullish in this coin, you have to get on top of this. You have to hold this horizontal yellow resistance as support, and then get above the 50-day and the 100 and 200-day that are sitting there, and try to continue to slowly work your way up, sort of like you did here, except the pattern was bearish and the volume and the formation wasn't beneficial. You would have to try to do something like that, but then the next time actually break it. The HBARs continued to trade down. We're at a regional double bottom, though. We had a perfect call on this, too. We're back during the end of this rally. We call this mountain double top. You see top 1, top 2, neckline. Point of a breakout got us down to 16 cents. You can see a couple of months later, the beautiful industry-only call gave you the first mover advantage down there to the 15 cents. And then we told you if we broke that, your next area would be 0.08826. But right now we've hit that regional double bottom now. like we talked about during this rally right here, that if we came back down to the 15 cents and got below it, it would first come down to a regional double bottom, then try to have a bounce back or a buyback because that's where some buyers are. And then the critical level would be getting back above this 15.5 horizontal blue left to right resistance, the 50-day moving average, which is just above that in red, the 100-day and 200-day are just above that from blue and green respectively. And you can see it did buy beautifully back up into this area. Now it got rejected by the 50-day coming down at it like we would think. It's sitting there just below that 15.5 cents. And if it gets rejected by that and pulls a classic hook nose reversal, it's very, very bearish. And it would more than likely on the next time come around breach this area over here. And that would head the price down close to that 0.088. If you don't want to happen and the price action to get bullish, what you would want to look at is to hold this 15.5 cents and then try to slowly work your way over the 50, use it as support, shoot over the 100 and 200, and then use them both as support, and then continue to work your way up over the course of about a week, right? So that's what we're looking at. I got to get to bed. This is kind of a long video. Like the channel, subscribe. Peace and love. The Rex Eyebrow. J.